and really excited to be with this group. It seems like people are interested and engaged, and that's really all I could ask for. So thank you. I'm going to run everybody through our investment pitch deck, and it'll probably take me 15 minutes. I'll try to do it relatively quickly. I know you guys will have questions. I would rather answer questions than just wax poetic for too long and bore you. So just maybe jot down your questions if you have them, and I'll kind of be relatively broad in my presentation. So here we go. So Iroquois Valley Farmland REIT is a real estate investment company. I think it's really important for people to kind of know the fundamentals of an investment. A lot of times with sustainable, organic, regenerative ag, there are a lot of bells and whistles. There's so many different areas where the space needs funding help that the fundamental value of the asset can be lost in discussions of the space. So really what our investors are getting exposure to is organic farmland. It's a portfolio of organic farmland. We're taking investor capital and either offering land access through leases where we purchase the land and lease it to them long-term, mortgages where we're underwriting them for a mortgage similar to a bank, and now more recently through operating lines of credit. We've learned as a company that land is just one tiny piece of the puzzle that organic farmers are faced with when it comes to financing. A lot of people in the space, when I'm discussing different elements of this investment model, ask questions about organic. I know that organic sometimes means different things to different people, and regenerative ag has gotten a ton of well-deserved play the last few months and year. But I kind of want to just hone in on why we require USDA organic certification for the farms in our portfolio. The USDA organic standard is actually the only legally enforceable way to come up with a set of rules and regulations that farmers can follow in order to make sure that they're creating social and environmental good. It has some really great specifics that permeate down to all of the impact areas that a lot of people are concerned about, from clean air and water to living soils, more money in the hands of small farmers, economic development in rural communities, ecological balance, symbiosis between nature and food production, the treatment of animals, and also the actual nutrition of the food being produced. So if you start to get into the USDA standards ever, which maybe some of you would be interested in doing, they really are robust, and we're excited to say that we have a diversified portfolio of certified organic farmland. But a crazy fact that some people may know is that only 1% of all the farmland in the United States is certified organic. So we are not in a post-organic universe where all food is now being produced organically and we don't have to worry about this anymore. There are many barriers to farmers to certifying organic. And in the context of this conversation, a lot of them have to do with finance. So you have to get through a 3-year when you're transitioning a piece of farmland from conventional to organic, and there isn't a lot of financial support for that transition. This company was founded in 2007, 2008, really as a response to the lack of traditional lending for organic farmers, specifically in the upper Midwest. If you went to an ag bank and said, hi, I want to get some financing to purchase a piece of land or get some financing to transition this piece of land, really the answer was usually no. Because during that 3-year organic transition, you are farming organically, but you're not receiving organic prices for your food. So there really isn't the banking world for organic farmers, and that's what Iroquois Valley is a response to. Welcome to whoever just came. We address all of these challenges with products, financial products. So we do have leases and mortgages for land access. Those leases and mortgages are both structured in order to help the farmer transition the land. So ultimately, the company is actually receiving more revenue post-organic transition in most cases than during that organic transition. So we thought about the financial ramifications of the 3-year transition and designed our financial products for farmers with that in mind. We have an indefinite commitment when it comes to our leases. So although the leases are 5-year terms with 2-year evergreen renewals, We never have an exit date. We don't sell the land. That's not how our company works. We're not a fund. We don't have a 10-year IRR. We're creating liquidity with new investors coming in, buying our stock, and cashing existing investors out with our stock redemption program. And we can talk about the specifics of that. It's really key to our model. You know, a farmer who doesn't own the land and is leasing a property for us is never going to put the time and effort into transitioning from conventional to organic unless they know that there's a long-term outlook. So that's really key to our model and something I'm excited to share more details about today. And then one other element for you guys to know is that we have a variable lease agreement on most of our leased land where when a farmer has better revenue, they pay the company more. There's a certain threshold where once they get past that threshold, they share every dollar 1/3 with the company, 2/3 with themselves. They receive 2/3 of every dollar after that. So that money, based on our structure, falls directly to the bottom line and creates an additional shareholder return. And so what we like to say in more simple terms is that the shareholders are truly sharing risk with these farmers. In years like 2019, where there was historic rain and flooding in the upper Midwest, all of our farmers planted late, all of them had relatively short growing seasons, bad harvests, and as a result, lower revenue. Our shareholders received basically zero dividend. This year, although we haven't announced one yet, it's getting towards the end of the year, and we're looking at the probability that there will be a small dividend for shareholders, and that's because the financial performance of the farmers was increased due to a better season of weather. We're pretty unique on how we source deals, how we underwrite them, and how we do them. Instead of buying a piece of land and then finding a farmer or a farm manager to farm it, we're actually reacting to farmer need. So we have a steady pipeline of independent organic farmers around the country. We're reaching out to us and saying, we've heard about you through a conference, through a webinar, through marketing we might do, word of mouth in their community, and we're interested in establishing or expanding an organic farm. We're evaluating those individual opportunities on a farm-by-farm basis and putting them through the company practice of, you know, an initial phone call, a survey, additional understanding of what's going on, and then ultimately a formal underwriting process with financials and historical company performance, projections, the whole 9 yards, credit reports. And then we're buying one farm at a time. So we are raising money basically every month, and we're buying farms basically every month. So we're not a fund, and we can get into sort of the nitpickiness of that later on, but we're not necessarily raising $100 million and then allocating $100 million. We raise about $1.25 million a month. We do that at an average of about $100,000 a time. Our investment amounts range from $10,000 to $5 million now. And so we're very incremental in our growth. We had about $15 million of growth over this calendar year, which is a great year for us. We have about $70 million of assets overall. Here's a little overall model of what we're doing, kind of to cap up this introduction. And don't worry, we're almost halfway through. So it's not like we're just getting started. But on the left, we have impact investors who are investing in our company through either our equity product or our note product. Companies taking that money in and then investing it at its discretion, either by purchasing farmland, leasing it to farmers, acquiring farmland, and then underwriting a mortgage for the farmer, or now more recently doing operating lines of credit. The farmers are paying our company either monthly, quarterly, or semi-annually with lease and mortgage payments. So we have revenue on an annual basis that can be seen in our P&L, and we're an operating company, like I said, not a fund. So we have, you know, expenses, licensed salaries, offices. We're not collecting a fee. And then those operating expenses are paid for by this revenue. We create investor returns with hopefully what's left over. And then there's this wide array of positive impacts for the communities, the environment, and the food supply. Let's dive in a little bit more exciting stuff here. A couple of deals we've done. So this gentleman on the bottom right, Harold Wilkin, is the first farmer that Iroquois Valley ever worked with back when it was the original LLC. A couple of friends and together, the two founders, who are still the CEO and chairman of the board, bought one piece of farm. Harold converted it to an organic farm. Since then, Harold has grown into one of the largest diversified farmers in in the state of Illinois, including around 450 acres that we own and he leases. He also owns his own land. He also leases land from other landlords. His son Ross now leases land from Ross and also owns his own land. And what's really unique about Harold is he's built a vertically integrated business. So they built their own small-scale flour mill in the community where they farm, and they're now distributing organic heirloom grain flour all over the Midwest, Chicago, St. Louis, Whole Foods, into bakeries and restaurants. And they also have an awesome direct-to-consumer business online that I can tell you guys about at the end if you want to buy some organic flour for baking this holiday season. Definitely an entrepreneur in his own right. And the key here is that the land access we gave Harold with the purchase of the land and the lease is really sort of one of the base components of his entire business growing and having really a whole host of positive social and environmental benefits on his community in the region. So we're just one piece of this entire puzzle, but certainly an important one. And Harold is one of our star farmers that we certainly mention a lot. Conversely, out on the West Coast, where I'm based in Portland, Oregon, company is based in Chicago. One of our more recent farms that we did a mortgage for is Little Farm by the Sea on the very southern part of the Olympic Peninsula. This is our first Pacific Northwest farm. This is a pastured livestock operation. This is a first-generation farmer. Harold grew up on a farm. I think he's fourth generation, and Ross is the fifth. Conversely, Jordan Beebe actually worked in impact finance for Big Path Capital before deciding that he really wanted to get his boots literally dirty and go back to farming, which he had some experience in. I ate one of Jordan's ducks for Thanksgiving, so I have a lot of personal experience with this farm that I'm happy to talk about. I've been up to this farm. Beautiful operation. It's about 100 acres, and he is rotating livestock through this grassland and wetland environment. Really lucky to be in a space where land values aren't too high as opposed to being close to Seattle. And so he has this space to be able to do some really incredible regenerative land management there that has ecosystem services and various different bells and whistles that are impacting the local and regional food economy. Also a new deal this year is an expansion of a current relationship we have with Gary Anderson. That farmhouse you see on the top right is a farmhouse our company is actually restoring through a partnership with a nonprofit. It's now going to be declared a historic landmark. This is the closest farm to Chicago O'Hare in our entire portfolio. So this is going to be a showcase farm for our business where people can come visit and see what we're doing. This is rotational organic row crops, but what's really cool about what's going on here is we just planted 10,000 trees in this incredible windbreak that's going to have a mix of species that are good for the environment, species that are good for wood, and species that are good for nuts and berries. And this is right on a main north-south highway coming out of Chicago, so you're in the middle of all this commodity, basically what we call chemical farmland. And this is going to be a showcase farm that has this tremendous, what will be this tremendous gigantic windbreak in the middle of all this other farmland that's just flat. That's kind of us really fighting tooth and nail to change the breadbasket of America from chemical monoculture to regenerative rotational organic grains. We have a lot of amazing partnerships in this opportunity. The Savannah Institute is a cool nonprofit that everyone should look up. They're doing a lot of prairie restoration in the Midwest, which was actually this amazing sort of mix of grasslands and trees before it became traditional farmland, as well as some money from the USDA, which we've enjoyed a few grants from in the last few years. So wrapping it up here, just to kind of zoom back out, here's a map of the 13 states where we have farms. We are dominated by rotations of grains, legumes, alfalfa, hay, sort of traditional, I would say, rotational row crop farming at scale. Usually the farmers are more reliant on equipment and storage than they are on labor, as you would be with, let's say, like permanent crops, nuts, and fruits. But we are starting to have a growing portfolio of diversified livestock, specialty crops, diversified vegetable, and dairy is also a pretty significant chunk of our operation. 70% plus, these are fungible numbers because we just made a big acquisition last week. About 70% of the portfolio is owned leased land. And then we have mortgages and operating lines of credit. And we're reaching about 80 deals now. So we do reinvest with the same farmers over and over again if that relationship is good. So we have about 60 to 65 different relationships, and we've done over 80 deals in the life of the company. This will be cool for everybody. This is a map of where all our investors are coming from. We're nailing down both North Dakota and West Virginia in January. We're just doing some SEC filings there. So this map will even look better in the coming weeks. But what is really exciting for me is this graph in the upper left. So I know it's small, but that's every single investment over the company's history. And usually when you're raising money for something like this, you're getting a lot of big chunks of money. And because we don't want a huge concentration of ownership in the hands of a few investors based on our model for not selling the assets and making sure that the farmers have long-term land security, and because really of the nature of kind of being an impact investment startup over 10 plus years where you take money any way you can, we have this amazing broad base of ownership and investment from folks who are really hovering around that average of $100,000 each. So it's a really powerful thing. We are approaching 500 individual investors. It's a lot of work for Lacey and I, but it really speaks to sort of the camaraderie and group effort to create the company that we have. And we are fundamentally owned by our shareholders. So we're now approaching 70 million in assets, and I would say that the percentage is even higher as it relates to shareholder equity. So when people talk about risk and talk about servicing our debt and what about the long-term returns, and I'm sure we're going to get into all of that. The fundamental reality for us is that our portfolio is owned by our shareholders. And so we don't fear big interest payments the way that a traditional farm would, or a traditional farmland asset group would, because we really feel that the way to grow this company is through long-term sustained ownership of mission-aligned investors. We do take money from IRAs, family offices, individuals, revocable trusts. I think maybe sort of like the plumbing, if you're a plumbing geek when it comes to impact investing, happy to talk about that as well. We now are available on 4 different brokerage platforms as an alternative investment. That was a big thing for our company to achieve in terms of trying to just make sure our fishing pole is in a lot of different ponds. So those are a little that I'm going to talk about if people are interested in. So you've seen growth, sustained growth over time. The share price is something that we should get into. So we value our shares once a year based on third-party appraisals of the land. From that, we come up with a stock price, and that's how we raise money. And when you want to sell, the company purchases your stock back at that future share price. So if you guys want to get into valuation and returns, maybe we'll kick that to the Q&A. But you can see that our share price went up significantly in the first few years and now has basically gone flat, and then it's dipped down a little bit. Really interesting is I could link everybody to a USDA graph of farmland values over the last 70 to 100 years. And you could almost layer the 2 graphs on top of each other for the last 10 and see that our stock price just mimics the value of USDA farmland across the country. Not maybe every single tiny detail, but it's very close. And that really just speaks to the fundamentals of what you're investing in here. There is the possibility for an increased dividend as we scale and leverage our costs. But when you're making an investment, especially an equity investment in Iroquois Valley, you're betting that the value of farmland will be higher down the road than it is now. And that's kind of something I really try to hone in on when I'm having a sales conversation. We are an award-winning public benefit corporation, and our stated public benefit is enabling healthy food production, restoring soil, and improving water quality through the establishment of secure and sustainable farmland tenure. I think a lot of people get lost in establishment of secure and sustainable farmland tenure, but if you think about this entire industry around fundamentally changing how we grow food and the long-term positive environmental impacts, you have to think about sustainability in terms of time. If you take a piece of farmland, invest a bunch of money in it to make it friendlier for the environment, and then 5 years later sell it for it to turn back into a conventional farm or turn into a housing development or whatever the case may be, that's not even really like a tiny drop in the bucket of what we're trying to do. So this idea that we're creating sustainable farmland access is the basis for all of the social and environmental business, impacts that we create. We've been, if anyone knows Impact Assets, we've been a IA 50 member since 2012. We've been, I think it's now 3 years in a row, Best for the World certified B Corp. Our farmers themselves have all kinds of layers of different certifications on their farms. We're very much a passive entity. We're not telling farmers what to plant, how to run their farm, who to sell to. We're really hoping to underwrite farmers that are going to be successful at the origination of the loan or the investment. So if they choose to go above and beyond the organic certification, that's well within their right, and we're excited about that. There's a couple of highlights here in terms of certifications that our farmers have. And then these are the two opportunities. So we raise money through two fundamental securities. One is our REIT equity shares, which is buying common stock in the company. Like I said, we're capitalized about 70% by that. We also have a unsecured promissory note product that we've raised $15 million through a different, we're now on like the 5th or 6th series of these notes. It's paying 2.25% to the investor. It's accredited investors only, whereas the equity are non-accredited and accredited. And what's cool about the soil restoration notes is that the company actually pays out 2.75% on an annual basis, but the investor only receives 2.25%, and the other 0.5% goes into this cash pool that's distributed to farmers in our portfolio who are doing soil restoration projects. So they actually apply through this program we have, and I think semi-annually we're awarding cash payments that are relatively nominal when you divide the amount of money into the pool to all the farms, but it might be $5,000 or $10,000 for building a fence so your livestock can go out on pasture, or cover crop seed, or paying a consultant to help you with soil science. What the investor has to choose to do is just an automatic way that farmers in our portfolio are ultimately supporting other farmers, because that's company revenue that we're choosing to distribute back out to the portfolio versus taking in as a potential dividend. So that's the presentation. I know that's a ton. But I thought we could maybe open it up to questions. Why don't I save the screen share up for a little bit in case I need to reference anything, and then I'll just stop sharing and we can have a bigger screen. And it seems like people are using the chat box. So let's see. What states have you invested in? We're in Louisiana and have contacts in Vermont. Would you do this for urban farmers? I've been doing a webinar on Friday on the subject. Okay, so we saw the states that we're in here. I think this is a good discussion to just talk about sort of how we choose to do farmers. So going back to this way that we underwrite farmers, it's really about the person and the opportunity. So we're not like saying, okay, let's be in California for XYZ reason, or let's be in Texas, or let's be in Louisiana, or we need exposure to organic cotton, or we need exposure to organic almonds. So much of the risk of what we're doing is tied up in whether or not this farmer actually can pay their loan ultimately, right? So since we're not farmers, if we buy $1 million farm and then lease it to somebody, and then that farmer turns out to not be who we thought that they were, and they have to walk off the land, we don't have farmers on staff that can come and make that a revenue producing asset. So there may be opportunities to sell the property at a gain, or get another farmer in the region to start farming that land. But ultimately, we're looking for sustained relationships with these people. And so if they want to bring something that is alternative to our current portfolio, whether it's region, crop, their background, their operational systems, we're all ears to that. And we're really looking at those things from a risk perspective. I think an interesting point for you guys to know is that, and I was talking about this with somebody yesterday, we've done so many of sort of our bread and butter deals of rotational organic grain crops in the Midwest that just naturally it's going to be easier and more cost efficient for us to get that deal through our process than if it's something we've never invested in a place we've never been, with a farmer we don't know anything about, right? Now, that doesn't mean that we haven't done deals that are unique to what we've done before. But if you just think about the entire idea of, we're asking ourselves about water rights, mineral rights, changes in climate, how much water is going to be there, what are the crop dynamics for this crop? Is there a pest? Is there are there market dynamics in terms of prices that could impact this farmer's ability just to succeed, not even to pay us variable rent and sort of create better juice for the return. So we are agnostic to a degree, but really depends on sort of the risks associated with the deal, and then whether or not the deal can happen based on the region. Last thing I'll say about this question is California is, one of, if not the most important agricultural state in this country, and we're not there. It's expensive there, and we don't know a lot of the crop systems there. We've had a lot of almosts in California. I just think it's a really great indication of how, because we're only $70 million in assets, if somebody wants us to buy $1 million farm, we're like, okay, we'll definitely look at it. If somebody wants us to buy a $10 million farm, we know that it's going to need to be a joint venture, or we're going to need a family office to get in on it, or we're going to need some sort of, foundation. There should be catalytic capital in there, because $10 million is just too big of a chunk of our portfolio, and it's too high of a risk for our existing investors. So that naturally starts to screen out certain deals and certain crops that we don't have until we're bigger in size, or until we get more aggressive about partnering with other folks. Hemp or cannabis, we are not against it. We just went pretty far with a farmer in Oregon who had a medical marijuana and commercial hemp business, and he did seller financing instead. He just got a better deal. So we're certainly not against it. If you start to dig deep on the environmental impact of hemp growing, it can get scary depending on where you are. I know, like, anyone who's spent any time or talked to anybody in Mendocino County will tell you that a lot of the marijuana and cannabis growth there has been completely detrimental to the natural ecosystem. So, that also stretches to things like nuts. We see a world where people will start considering almonds produced organically or not as sort of a social detriment based on their water use. And so when someone comes to you with a deal for walnuts, the walnuts become the next almonds in 10 years. And so that's kind of in the weeds, but there's a lot to balance. And yes, this farmer we talked to in Oregon was going to do rotational regenerative hemp, where he has pigs and cows actually like fertilizing the hemp on field. That's the kind of deal we'd be interested in doing. Can you talk about why you're not a fund? So a fund likes to liquidate after 10 years is one of the biggest reasons. And so there is a challenge to our model to raise 100 million, raise a traditional fund. The question is, what's the exit? And we talked about this a lot more when I first started the company in 2016. Like, it's called the well hopefully lease. That our Dave Miller loves that term. That's one of mine. I'm like smiling because I've heard him say that so much. It's like, well, we're going to finance this farmer, and he's going to do he or she's going to do 10 years. We're going to be the landowner, and then after 10 years, it's going to be a certified organic farm, and hopefully the farmer's going to buy the farm for us so that we can have our capital returned to investors. Or hopefully the farmer's going to find, there's going to be another mission-aligned takeout entity, or hopefully Fund 2 can take out Fund 1. But if hopefully doesn't work out, all that environmental improvement is gone. And, we're really trying to think in generational terms here. Like, it's taken a few hundred years for us to screw up the earth, and it's going to take well beyond that for us to fix it. So this idea of not having institutional investors who expect an exit point is a key part of that. I do think that if Dave Miller were here, he would tell you that, he originally was raising money for this thing at a farmer's market, asking for $25,000 investments. So our ability to raise capital and sort of our maturity and our presence in the space is like sort of miles ahead of where it was when it started. And he really did whatever he could, and he saw that he could raise little bits of money from many people. So becoming a REIT ultimately would kind of just, when we transitioned to a REIT in 2016, sort of befit that structure for a broad base of ownership to a broad group of investors. The last thing I'll say on this is we would love to cost less than 2%. I think our operating costs this year We'll see. We're doing the financials for the dividend right now, but maybe it will be a little bit higher than that. But, you know, we're not trying to just collect a fee. We're trying to be a super efficient company that only costs what it costs and create, you know, as passive an investment vehicle for investors as we can have. Love the early charts metrics. Do you use any tools besides your B-Lab metrics to measure your impact? We have an awesome public benefit report. Lacey, maybe you can link everybody our public benefit report in the chat. That would be awesome. And that way people can see it. I will tell you, I always like overshare on stuff instead of just hard sell. I like people to know exactly what's going on with us. It's really hard to have, you know, people want metrics that are consistent with financial metrics, like how much carbon sequestered this year. And we are such a unique business in terms of all these different farmers in all these different geographies growing all these different things. The geology on every single farm, like a farm could be in the same county in Illinois and have fundamentally different soil or fundamentally different, you know, rainfall patterns, let's say, and that's probably less likely. So you can't just stick a probe in Havre, Montana, where we have 7-year grain rotations with the bees, and stick a probe in the soil and, you know, at the Union Fair Farm in Maine where they're doing grass-fed dairy and get any reading that's worth anything. So we're super excited about the industry coming around us with like easy to digest metrics that can then be used to show their return in ways other than finance. But, you know, it's not there yet. And the double-edged sword of it all is we don't have a light switch to make every farm do anything. You know, Farmland LP would be considered a competitor in the space. They have a totally different model, and I know those guys well from conferences, and they're 100% behind creating social and environmental impact with organic food. But they're vertically integrated. They hire farm manager. They'll buy a big swath of land. They'll take out the existing crops, which are low value, and they'll plant like blueberries or nuts or wine grapes. They'll measure everything. They have agronomists. They have cold storage, but they're not necessarily, not to editorialize, but they're not sort of, you know, supporting independent organic farmers with their own businesses. So just one of those things where it's more difficult for us to cost effectively measure our impact in a way that benefits our shareholders without taking away from their return. Will we get charts in the recording? I'm happy to send this pitch deck to everyone. Maybe Lacey could link that as well. Awesome. Here's this land value chart that I was talking about. Whoops. Kind of back to Lacey. Here we go. In case everyone's worried about that. Slides for the presentation. Public benefit. How do farmers find out about you? How do investors? Oh, whoops. I missed a timber one from Matthew. Can you click? Oh, wait. Eileen. Going back up. You guys are great questions. Southeast is cheap. Come on down. We're looking for it. We need to be there. We almost did a deal in North Carolina, actually, but the farmer didn't meet our sort of impact standards. They were organic by the letter of the law, but not really by the spirit. So we ended up saying no to them. But I would imagine we have a lot of investment advisors who yell at me when I see them in person about that are based in Charleston and Charlotte. So I'll give you their email and you guys can get together and yell at me together. Who are your primary competitors? Farmland LP. There's a new fund that I really like out of Boulder called the Perennial Fund by Phil's gonna kill me for not remembering. Mad Agriculture. There you go. Phil and Brandon are great. If our Boulder-based person wants to meet with them, they'd be totally open to it, I'm sure. Do a call. Could be potential collaboration opportunities there. There's a new fund also from Colorado. We're the only one that have this sort of broad-based investor support. I don't mean that we're huge, but nobody else is raising money this incrementally. And it's because it's hard, it's time-consuming and expensive. But we really, I would say we're furthest along in this space on all of these different structural discoveries we've had. I would say you could definitely have a discussion around profitability, around efficiency, Would we do things differently? Have we made mistakes? 100%. But nobody else is raising money in a $50 million retail offering in this country doing what we're doing. So the 5-year redemption is not, someone asked, is the 5-year redemption flexible? The answer is no. The SEC requires you to treat all shareholders the same when you do a Regulation A+ Tier 2 offering, which is technically what we're doing, which is kind of the biggest offering you can do with that, Jobs Act, crowdfunding, Reg CF stuff that some people might know about, where all of a sudden you could raise money on Kickstarter and things like that. We're actually like the biggest gorilla of that security law, and you have to treat everybody the same. You can sell your stock in a private party sale. If for instance, Ryan owns stock and wanted to sell it to Matthew, they're on either side of my Zoom, so I'm mentioning them. He could do that at any share price he wanted, but they would fill out paperwork for a transfer agent. We're not going to facilitate that. How much equity does Farmer need to put up? In the leases, it's pretty cool. Let's say, I always like to give the $1 million farm idea. So let's say a farmer reaches out to us, or we're already working with them and they want to expand. And there's a farm for sale. 80 acres is usually the size in the Midwest, and it's $1 million. In the lease, we're buying that $1 million farm. We're paying the $1 million outright, and the farmer's putting zero money down. There might be a few transaction fees, but there's no money down. They owe us 3.5% or $35,000 a year to farm that land. And if their revenue on that piece of property goes 3 times that base rent, so $105,000 or more, because that's 3 times the $35,000, every dollar that after that is split 1/3 Iroquois, 2/3 farmer. And that's the very agreement where, if you kind of fast forward through all the details, it means that when they're certified organic, they're selling at much higher prices. And if the crop prices are steady or good, which they haven't been the last few years, we're hopefully getting between 4 to 6% yield off that property. But it's a function of how much this farmer is selling. And so that is the shared risk component of what we're talking about. Let me see if I can zoom through these, and then, although I guess these are the questions instead of people. Can you clarify investment criteria? Are you looking for certain baseline of sustainable practices know-how, or is this part of your value proposition to help the farmers adapt and transition? So we're cherry pickers. We always have more farmers that want financing than we have money to spend. So we are gravitating towards people that provide us the least amount of risk and the sort of most, complementary addition to the portfolio, which could include geographic and other diversification. But we're not a business that's trying to support first-time organic farmers. Now, there are cases where a conventional farmer may illustrate that they have the know-how to become an organic farmer that we might support. But usually there are enough organic farmers that are looking to expand or refinance or farm with their parents, and now they want to go out on their own, that we're farming certified organic farmers. I say a lot that there's cheaper money out there for younger, less experienced people to farm. So if you're graduating from liberal arts school or whatever, and you want to start a CSA farm, the farm serving has really good programs that are ultimately less expensive than we are. We end up sometimes layering those financial products with ours. Like, we'll take a first position on a mortgage, and FSA will be the subordinate loan, which is amazing. FSA, the U.S. government probably does more for farmers than people know. I mean, there's so much they can continue to do, especially for sustainable farming. But we're not in the business of more high-risk farmers. We've even supported farmers coming out of incubation programs for instance, organic dairy production that a company you would all know put on, and those farmers have failed. So one of the best metrics of whether or not a farmer succeeds is how long their family has been farming. That's anecdotal, but it's true to a degree for us. Very curious to hear your perspective on how Iroquois looks at carbon credits and the potential role in ag, especially in light of the work being done in the last year plus by companies like Indigo Ag. In other areas of conservation finance, it can be a key part of the investment model, e.g. lime timber. Has Iroquois explored this with any farmers? Like, great question. So there's so many ways that there can be revenue on a farm that are not related to growing food. And luckily, there are many groups that are coming up that are coming to us saying, your farmers can make money this way, your farmers can make money that way, your farmers can make money this other way. I think if you ask me personally, that if I were to start a organic farmland REIT or organic farmland fund tomorrow, what would I think about? It would really be baking that DNA into the company, because absolutely right, like lime timber, and I know Peter Stein well, like the whole brilliance of what he's doing, like we can just lower the investor basis immediately. We're going to be better than the competitors because we're getting non-timber related income for this land. So yeah, even before carbon sequestration, which I feel personally is in its nascent stages, and the headlines in the New York Times do not indicate the truth around how sort of stable that market is, to say the least. Land conservation easements. There are plenty of communities who want to permanently make farmland farmland. Wetlands mitigation credits, putting a solar array up, putting a wind farm up. I personally think, even in a public forum, I can say that like something we could work on is integrating all of those conservation practices into our business. Luckily, we've received an awesome grant from the USDA through their Conservation Innovation Grant Program to do just that right now. And so we're ramping up those efforts, and our Director of Conservation, John Stephen Vianucci, is certainly doing an awesome job finding more grant money for our farm portfolio. Kind of in plain terms, once again, we're not the business owners, right? We're basically the landlord or the bank, even though we're not a bank, and no one at FINRA will ever hear me say that we're a bank. So you really want to concentrate on this idea when you're thinking about that of like, it's hard. Farmers are busy. They're running their own businesses, and you can make an amazing presentation about all the money that they could make doing X, Y, or Z, but you don't have any ways now to, we don't have covenants in our leases saying you have to have carbon sequestration credits. So it's a work in progress is the short answer to a really long answer. How do farmers find out about you? How do investors? Farmers find out about us because they need money, and farmers who need money are good at finding people who have it. And they do it through the Moses Conference in Wisconsin is a great sort of, I say this jokingly, super spreader event of information. They find us online. We do some small scale marketing. Certainly tons of groups around the country know about us. So if like a CDFI is getting approached, or a group, even organic certifiers know about us and could tell organic farmers. Investment advisors are one of our biggest as it comes to capital raise. Being on the IA 50 all these years, a lot of people who know nothing about the space find us there and reach out to us. But, making sure that when an investment advisory firm comes to us and says, I have many clients who would be interested in this, that for me is like, ding, 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 ding. We sit down with them and we do a huge education on what we're doing. And we really try to help them understand in a completely honest way how this could fit into our portfolio, into their portfolio. And then, you start with one investor, and then 3 years later, you have 15 of their investors, and they're investing, $100,000 each or $50,000 each, and that's $1 million. And if you have 25 investment advisory firms that have money in you, that's $30 million, and that's, 40% of your capital stack. With this new Regulation A, we've done a cool job of doing more traditional digital marketing, and we now have an investment portal, so you can go online and invest $10,000 in us through an electronic signature and wire us the money. And Lacey's doing an amazing job making that system better. So we're kind of going scattershot. And then, of course, more than 50% of all the equity capital we raised this year was in two investments: a $4.165 million investment and a $2 million investment. One was a high net worth individual, and one was the Rodale Institute, which is a nonprofit that does organic farming research that people probably know about if they're in this space. And they have an endowment, and they invested $2 million in our endowment. So mission aligned foundations, family offices are really important for us. And I'll just say, for people who are going to go into like sort of impact investing sales, which is what I do, the easiest sale you ever have is when someone discovers you. You know, you can cold call 100 people and go nowhere, but basically a lot of people call me looking for a reason not to invest because they've decided that we fit who they are, and that gets you a lot further. So a lot of soft marketing, you know, creating a sales funnel. We do a lot of work promoting what we do with videos and one-pagers and public benefit reports because it's important, and we want to tell the stories of what it is that's going on. Hopefully that was an okay answer. Okay, I see I have 5 minutes left. Nicole, should I just keep going? Urban farming. Okay, urban farming. Good job. So we do not have any urban farms. We are not, that's just not our business model. I would say our shareholders wish we made more money, not less. And so trying to, and that doesn't mean urban farming makes less money, but like trying to really continue to well define the lane that we're in and make sure that we've done an amazing job this year hiring new people, building organizational capacity so that, you know, as fundraising grows, fundraising has grown each of the last 3 years. There's going to be a year here where we raise twice as much money or 3 times as much money, making sure that we can efficiently allocate that capital. And we just don't see any end in sight to the amount of sort of scaled organic farms in the communities where we work needing our financial support. So, you know, I'd be happy to have a call about how to do this for urban farms. I think that the food space needs all the different challenges it has. I will say that some of our farms are certainly selling into urban communities, direct to consumer, CSA, restaurants. But yeah, right now we're sticking to sort of the farmland asset itself. So Nicole, why don't I pause there? Has anyone ever spoken more than 1 hour on an IEN presentation? I want an award. So
did a great job. That was probably the best lightning round response to questions I've ever witnessed.
Nice.
And just have a few minutes here. So I don't know if anyone has any last questions for Alex, or Alex, if you want to talk a little bit about where folks can find more information. As you mentioned, and I think already dropped in the chat, there's a link to the slides. We can send those around as well with the recording, and any other resources Alex would like us to share. And if you're comfortable doing so, I can add everyone on this call and Alex to one email chain if anyone has follow-up questions too.
Yeah, that's amazing. I think one thing I missed for this group specifically is we have no endowments invested in us. And I think the biggest reason, other than, you know, like I'm not going to say there's no risk or anything like that. Like I'm sure that there are financial reasons. We're too small, right? So one of the things is that I mean, my understanding is that more institutional investor types won't do due diligence on deals that can only take, for instance, as a round number, $5 million. So I am really interested in, Nicole and I have emailed about this and even talked about this. You know, I know that endowments are doing an amazing job with like seed funds or carving out sleeves for students to run, or even just, you know, and for us, like $10,000 is an investment we're excited about. $500,000 is an investment we're excited about. $1 million is an investment that we're excited about. And farmland, like take away all the bells and whistles of Iroquois Valley, farmland is so well suited to endowments and has been invested in by endowments for decades. So there should be some portion of some sleeve of every endowment that has $100,000 of our stock, in my personal opinion. So, you know, I would love to talk to people about, you know, whether it's advocacy we need to do, and it could be not about us, it could be just about how we're one of dozens of investments that are doing really important impact work on the ground, that are really well aligned for long-term capital preservation, and that stakeholders like you really want their universities or clients or whoever it is to invest in. and, you know, finding out a way, like as Dave Miller, again, not to quote him too much, but says like, they should just invest $50,000 in us instead of telling us we did a good job and like they'll talk to us when we're at $100 million in assets. Like, there's no reason not to get started on that. And, you know, we've shown that we have plenty of reasons why we're a good fit. So I just wanted to say that to this crowd because that's something I missed. And 100%, please share my email with everyone. IroquoisValley.com has tons of resources on it. And I'm completely open to having like follow-up calls around due diligence on the investment, brainstorming, learning from this to apply to other things. Like, we know, you know, we know intimately the challenge that ag faces to make it to the different world we need. And we're happy to share as well as try to fundraise.
Awesome. I think that that is a fantastic note to end on.
Thank you guys for coming. This is a great group, great questions. Always happy to talk to people, and yeah, have a great holiday season. Ooh, our holiday guide. That's it. I'm putting our holiday guide in the chat, or I'll email it to everybody after Nicole does, because you guys can buy some flour from Harold for baking pies.
Sounds great. Thank you everyone for joining, and thank you, Alex, for a great presentation.
Thanks, Nicole, for organizing it. Bye, guys. Have a great time.